All right, investors, welcome back to Stock AI Insights. This is earnings analysis, and I'm your AI analyst. Today, we've got a big one for you. We're diving deep into Sea Limited's powerhouse third quarter 2025 earnings, which just dropped on November 11th. But before we jump in, you know the drill. This content is for educational purposes only and is not investment advice. Investing always carries risk. Okay, now that we've got that covered, let's get right into it. Sea Limited came into this quarter with some serious momentum after a strong first half. And let me tell you, the results, they absolutely did not disappoint. To really set the stage here, let's hear it straight from the top. Chairman and CEO Forrest Li said, after a very strong first half of the year, our momentum has continued into the third quarter. And honestly, that really sums it all up. This is a story about accelerating profitable growth pretty much everywhere you look. So let's get into the actual numbers. First up, let's talk revenue. This story here is just, wow, broad-based strength. It really feels like every single part of Sea's business was firing on all cylinders. So, the headline number? It's a big one. Sea pulled in a total of $6 billion in GAAP revenue for the quarter. And get this, that's a 38.3% jump year over year. This wasn't just one part of the company doing the heavy lifting. This was a full team effort, a coordinated surge from all their core businesses. So you might be asking, where did all this growth come from? Well, it really boiled down to two key areas, their e-commerce and fintech arms. Shopee, their e-commerce beast, saw its gross merchandise volume, that's GMV, climb by over 28% year over year. But the real showstopper, the digital financial services unit, it just exploded, with revenue shooting up by almost 61%. Now, this chart right here gives you a perfect visual of that strength I'm talking about. Just look at these numbers. E-commerce is up nearly 35%. Digital financial services, like we said, is up over 60%. And even their gaming division, Garena, posted a really solid 31% increase. This right here is what it looks like when a company is absolutely hitting its stride across its entire portfolio. Okay, but how does this stack up against what the experts were expecting? Well, that's where it gets even more interesting. The market was already expecting a pretty good quarter, but see, they delivered a great one. That $6 billion figure didn't just beat Wall Street's consensus of $5.62 billion, it totally blew past it. When you see a beat like that, it tells you the company is probably grabbing market share and figuring out how to make more money from its users even faster than the most bullish analysts thought. But a huge top line is only half the picture. Profitable growth? That's the real name of the game. So how did Sea's cash engine really ignite this quarter? Well, the answer comes down to operational leverage and a massive rebound in some key areas. The key profit metric we're going to focus on is total adjusted EBITDA. And the number here is a real standout, $874.3 million. That is a jaw-dropping 67.7% increase from this time last year. So the company isn't just getting bigger, it's getting way more profitable as it scales. And this table here breaks down exactly where that profit surge came from. The details are pretty fascinating. Just look at that e-commerce line for Shopee. Adjusted EBITDA went from just $34 million last year to over $186 million this quarter. That's a mind-boggling 440% increase. Wow. And at the same time, digital entertainment grew its EBITDA by a very, very healthy 48%. And speaking of Garena, its performance this quarter, it was like a dormant volcano just roaring back to life. Seriously. This was its best quarter since 2021. And what was the trigger? These high-impact IP collaborations they've been doing. The campaigns for Squid Game and Naruto Shippuden were just huge successes. They drove bookings up over 51% and really proved that Garena's creative engine is back in top form. So the key analyst insight here is absolutely crucial. The main reason for Sea's massive jump in profitability is the incredible operational leverage in its e-commerce business. Shopee is showing everyone that it can grow its sales super fast while also expanding its profit margins at an even faster clip. And a lot of that is thanks to getting better at monetization, especially from things like their advertising services. Okay, a strong quarter is great, but as investors, we're always looking down the road, right? So how does all this success change the company's guidance and what they see for the future? Well, after a quarter this powerful, it's no surprise that management is feeling confident. They've raised their full-year guidance. They're now expecting Shopee's full-year GMV to grow by more than 25%, and for Garena, they're guiding for bookings growth of over 30%. That's a pretty clear signal that they believe this strong momentum is here to stay. Okay, but a good analysis means looking at the whole picture, right? The bull case is obvious. This upgraded guidance shows a ton of confidence in their growth and market position. But the bear case does raise a good point you should be aware of. You have to keep an eye on costs. Sales and marketing expenses shot up 31% from last year. And maybe even more telling, revenue from their value-added services, which includes things like logistics, actually went down by 5.7%. The company said this was because they're spending more on shipping subsidies. That's definitely a key thing to watch to make sure they're not just buying growth at the expense of long-term profitability. So after digging into the revenue, the profits, and the outlook, what's the final word on this quarter? Our final verdict is this: Sea Limited put up an absolutely exceptional quarter. We saw accelerating, profitable growth across every single segment. That said, those rising costs, especially in marketing and shipping, are something that definitely needs to be monitored closely in the coming quarters. And that's our breakdown of Sea's Q3. So what do you think? Are those rising costs a red flag? Or is this just the price you have to pay for aggressive growth? I'd love to hear your thoughts in the comments, and if you found this breakdown useful, do me a favor and drop a 1 down below. I'm your AI analyst, and I'll catch you on the next earnings breakdown.